back to the channel, and it is my pleasure as always to have you all on board. And in today's video I want to tap on something that is very crucial, and by the way, I think it's one of the most topic that is underrated. However, I want just to firmly discuss about it and give you the insight as what you need to focus on, because most of you have heard the saying that structure is king, and I want to show you why and the reason why it is king. Because the way we are trading with the Falcon system, it always gives us the edge to really know and capitalize the moves in the market and know when and where to make which particular decision. And also, I'll be diving deeper to show as to why you need to focus on market structures and not only the candlestick. That's why we say structure first, candlestick secondary, because most people will be just laying on the candlestick because it's one of the confirmation of the entries, and they will be executing trade without understanding what the market structure is telling them. Now I want to show you that in the chart rate, so follow me along. Now if we just have a look from the market standpoint, we can see that this was the double top area where the price came back to snap, and as we can see, we saw that particular impasse. The market left here a footprint. We had the impasse, then we had a pullback, we had a continuation, then market just came to snap back in this particular value area, which is one of those ones that we are going to focus mainly. And this is one of those hook points we call in the market, right? So this is one of the hook points or the footprints in the market that you need to really understand, because they carry volume. That's why you see the market has exactly just pulled back into the area before we see any shift that it has shown us, like this particular impasse. Now follow me along here. Now if we just break down in this particular pair over here, especially with after snapping this particular footprint, I want just to show you as to why market structure is king, and you should not put too much of your emphasis into the entries only, just based on the candlestick. Okay, so I'll cut off the price over here and I will show you this. Now if you just have a look on this particular area, we all know that this is a footprint that we truly understand, and it has already formed a double top formation or a V formation if you like. And from what the market is just showing us, we can see that we had an impasse. We had an impasse, this acting as our correction, then we had again what? Impasse. So one could say, okay, whenever we see the market is coming to an end, we normally see a pattern of something like this: an impasse, correction, impasse toward the value area, right? And that is always giving us some signs that we are coming to an end, right? So one would have opted just to enter into the market. Let's just cut the price from there, and I want to show you something over here. Now one would have opted to see this particular area, and they would have said, this is a nice area where I can really capitalize on and I can really focus on to take my position, which is very true because it's a double top formation, right? However, here's the catch. We know this is the candlestick that we understand, like a rejection candle, or others might call it maybe a 1 hour rejection candle, right? And from this example, it has acted as a candle that is forming around the double top. So they would have opted just to enter over there, and their stop loss just above over there with maybe 13 for the risk entry, right? Now let us see what exactly happens. You'll be tagged in, and then this will start happening. Okay, this will then start happening. So what will happen? Do you see the pattern within the market that is showing you? Which particular pattern? You see, the market is giving you more of a consolidation. Okay, so if you just study closely to this particular price, you'll see that this was a 1, this was a 2, this was a 3, and now price is not moving from this area impassively, rather it's moving more correctively, which is giving us an indication that the price might be just wanting to come back to this particular high over here, just to form or to tap that particular area or to break that particular area. So what you'll find is that we might get something of this sort. Price will just still correct around this particular area, still break to the upside and give us something of this sort, which will still be one of the structures that we are looking now as a complete structure, a reversal structure. Which kind of structure is that? Ascending formation. With this will act as a middle section. That will be your first touch, this being your second touch, and that being your third touch. Okay, let us see just what the market just gave us, and we will know exactly, because at this stage one will be just around break even, right? And let us just move. So you see, one will be at this stage running around 2%. So maybe they will be at a break even, or they would have opted just to maybe lock in some profit, but nevertheless we don't care. So let's see what then happened next. This is what exactly happened next. As you can see, price has snapped in that particular area in form of the volume. So as for now, we can see now the market has printed to us a very clear picture as what we were forecasting. Now, it's not the best example, but we can see it's looking similar to one of the expanding formation. And as we know, the market is always imperfect, so we should not deal that much. But in this example, I wanted to show you not a perfect example, but just giving you a glimpse of what the market will likely do when it forms this particular structure and the power within the structures within itself. So let's assume this was the best and better looking maybe expanding formation. So one would have seen that rejection, and then after that 1 hour retrace, or maybe call it for consecutive sake, this particular rejection over there which has happened, one would have opted with entering over there with a stop loss just above over there, right? So they would, at this stage, they would have been tagged in. So let me just show you even more clearly so that you can see it by yourself. Okay, one would have opted to enter over here. Let's start just the price over there. Okay, after this particular rejection, which is a very strong rejection, one would have opted just to enter over there if that is what they are looking, and then maybe their stop loss would have been just above over there for 20, 18 or 15, whatever it might be. This is just an example, right? Then they would have been tagged in at this stage, and then this would have happened. Then let us see what exactly happened. Then we can see price just started moving. It was just a kind of a pullback, which we can call this as a correction, right? And then the price just moved impassive. And what do you see at this stage? We are running almost 3%. Now, we can see here the power of having these market structures, because they are showing us the power. When they are complete, they can give us that advantage of the market shift and heavily moving whenever they are complete. Now, when you focus just on the candlestick itself, you'll be far way more behind lifted. Even if in this example you can see it played out nicely, however, you can see after the complete of the structure within itself, we saw something very nicely and a good movement or good run into the market, just leaving even that price action to, you can see it's just keep moving. You can see that's the power of having the right structures at the right areas and executing the trades with that particular structure at the right area, instead of just focusing on the candlestick within itself, because that may lead you to having unnecessary losses. So I hope this helps in providing the clarity as to why we always say structure first, candlestick secondly, and hope to see you in the next video. Don't forget to subscribe, and wishing you all the best. Enjoy the rest of your weekend. God bless.